Hello everybody, in this video I'm going to be doing a brief stock analysis on Lyft, and this is not by any means going to be a deep dive into their financials, but more so me just giving my opinion on the company as well as the ride-sharing industry. First off, I just wanted to show how quickly ride-sharing is growing just in general, not even completely associated with Lyft, but it's almost doubled from 2017 to 2021, which is pretty bananas, and I think it's just going to continue from here without even slowing down. In the US, the market is already pretty crowded, especially in all of the really big cities, but there's still a ton of international growth out there, as well as in a lot of different rural areas. Normally, I like to start out by taking a look at the 5-year chart for the company, just to give more of a long-term perspective, but Lyft actually has only been on the market since Q1 of last year, so can't really do that, but they had a really rough IPO, opening at a little less than $80. And then at the beginning of this year, still only being at $43, and then going all the way down to $14.50 when the overall market was down in mid-March. And then the stock quickly recovered to about $30 and has pretty much stayed there and flatlined. And then I wanted to take a look at the revenue and earnings year over year for the last 4 years. And if you're just looking at revenue, it's doubling or over doubling year over year, and it's really incredible. But if you look at earnings, it's at about negative $0.75 billion from 2016 to 2018, and then tripling to over $2.5 billion in 2019. And then if we look at the last 4 quarters, the story's not much better. You're seeing a lot less revenue, which is as to be expected. There's not nearly as many people traveling around, going to different public places and gatherings, especially getting out in big cities where ride sharing is huge. But they actually didn't have a huge decrease in earnings for Q2 of 2020, so I guess that's good on them. But then if we look at Uber comparatively for year over year for the last 4 years, they're not quite growing their revenues quite as quickly just because they're a little bit more well established and they have more revenues, but the earnings, it's a much better picture. In 2016, you can see that they just had slightly marginal negative earnings. In 2018, actually having total positive net earnings, even though they weren't actually a public company yet, so it doesn't end up mattering too much. And then in 2019, you do end up seeing a big downward movement in earnings. And then this next image is actually really cool. It shows Uber and Lyft's biggest markets here in the US. So you see in most cases, Uber does have a bigger market than Lyft. Sorry about this being a little bit cut off, by the way, but Lyft does have a few bigger markets, such as in Orlando, Pittsburgh, Fort Lauderdale, and there's a few more as well, Denver. But in most cases, Uber is the bigger ride-sharing company. But another thing to take into account is that Lyft is just operating mainly in the US, but in some markets in Canada as well, whereas Uber is really in most continents. They have some kind of involvement, and I believe their biggest market is actually in São Paulo, Brazil, as well as several others in their top 10 biggest markets. And this is actually the main reason why I would be more bullish on Uber than on Lyft, just because they're the first player in way more markets than Lyft, and the only one really in several countries throughout the world. And they're investing a lot more into different ride-sharing companies, whereas Lyft is more just focused on margins and becoming profitable, and Uber's more likely to become profitable first anyway, so they're not really doing too great there. But anyways, going into the next thing, I want to take a look at a few points by the bulls and the bears by analysts at Morningstar. So going into our first positive point here, Lyft will profit from its do-good brand in comparison to its competitor, Uber. As I mentioned in my previous video where I did this type of video for Uber, Uber has had a lot of different problems with, sex scandals and racial slurs and all kinds of different problems with their drivers and their top management, whereas Lyft has had a much better brand in general, whereas Uber's had all kinds of problems. And it's not just one overarching story. They've had dozens of problems over the last few years. And then anyways, going into the next point, Lyft's aggregation of multi-model offerings will drive in-app stickiness. And I would actually say Uber's doing a little bit better than this than Lyft with Uber Eats and some other things as well to drive revenues other than their main model. And then going into the last positive point here, Lyft's position in the autonomous vehicle race could equalize gross and net revenue. And in my opinion, it's three main players that are leading in autonomous vehicles right now, and that would be probably Tesla in first, followed closely by Waymo, and then in a distant third would be Uber, and then probably behind that would be Lyft. So I wouldn't say that Lyft is likely to be the leading player technologically with autonomous vehicles anytime soon. And then I wanted to talk about a few more negative points as well. The first one being ride sharing is still a relatively new industry, which leaves plenty of room for increasing regulations. And we're actually seeing that in California right now, with California requiring ride sharing to contract their employees, and actually requires Uber and Lyft to give their employees more benefits. So they're actually not active right now in California, which are some of their biggest markets. So absolutely hurting them, especially Lyft, with that being one of Lyft's biggest markets and maybe their biggest revenue state in the US. And the next point is Lyft may lose on pricing power if competitors with larger markets, like I mentioned with Uber being in Sao Paulo, Brazil, as well as dozens of other markets that Lyft is not in, to use these profits from its monopolistic regions, as I mentioned, where really no other players are there, to drive down prices in the US and Canada. So if Uber does continue to become bigger and bigger, they are going to be able to cut their margins razor thin in the US and kind of make Lyft exit the market. And lastly, I just wanted to share the research report overview on Robinhood. And the Morningstar rating for it is 4 out of 5 stars, which I was actually pretty surprised about, but I think it's mainly just because of their fair value right now, which is at about $50, but they've been doing pretty poorly since the IPO, I would say, so I'm still a little bit surprised to see that. They have a narrow economic moat just because they do have some existing technology that they have invested in, as well as a pretty strong brand, especially comparatively to Uber, and then very high uncertainty, which I would agree with, especially what's going on with California right now, and then standard stewardship. Anyways, that about wraps it up. If you couldn't tell from many of the points I made in this video, I'm very bullish when it comes to ride sharing, but I'm much more bullish when it comes to Uber than when it comes to Lyft, mainly because of the international presence. But anyways, I make tons of other brief stock analysis videos very similar to this one, so be sure to come and check it out. Subscribe for more content, and thank you so much for watching to the end.